Then Jayakumar, he joins us. And Jakes, good morning. I'm not referring to your age when I say old timer. I'm genuinely talking about your market experience. So wisdom actually, that's the right word.
I'll take whatever comes at this age.
Okay, what is your sense? I mean, enough and more has been discussed about how should one judge the carnage in the mid-cap stock. Some are blaming it on SEBI recapitalization, some are blaming it on ASM, some are blaming it on both. What is the grain of the truth here? Is the pain in the mid and small cap behind us? And is it time to be cherry picking in the mid and small cap stocks now?
Well, I think for starters, you need to more than cherry pick. I think there is substantial
I like
value
your confidence.
that is there. So there's no question. It's not today. My tweets kind of have said this. Not today, even a few days ago, where I personally believe that when there is this mass sort of movement towards flight to safety, where you'll want to buy every private sector bank at little more than even 4.5 times book or 5 times book, and that you believe is safety, or a 50-60 multiple on large consumer and retail companies quoting at astronomical P's. I think that's the time when you realize that there has to be smart money that has to go elsewhere. And of course, a moot point that most market participants will tell you that there's not too much money left to invest. Yeah. So where is the smart money in that sense? So that's the reason I think some of these stocks will bottom out. That the mid cap space looks alluringly interesting, but flow is not there, and every rally will see people who are stuck trying to exit, and that is in fact the good foundation for a pretty healthy mid cap rally. So in fact, I am of the opinion that indices may hit all-time highs, may sort of move slightly over that, but the big moves in a material sense will come from mid caps. And I think you need to, because this carnage has been indiscriminate, because the moment SEBI came out and said that beyond 251 happens to be small caps, and that classification meant that companies I think below 6,000 crores or whatever. So there's a market of 7,000, 8,000 listed stocks, and you say that beyond 250, large funds etc. will really not will be putting money into mid cap into small caps. Then you know that the entire movement of money has been sort of ordained to go to the large cap. So in that environment, everything else gets rubbished. And you have calls on PMS managers, there are redemptions across the board, and performance leads to more redemptions.
Jake, so there are two ways to look at the mid cap selling, and I'm just curious to understand your take on the mid caps space once again. One is that you've seen a price wise correction. Second is that we could see a large time wise correction. So are we reaching that period of not price wise correction which is nearing to its end, but are we reaching to that extended time wise correction period?
See, when was the last time that markets told you that you're preordained to get a bottom and have a V-shaped recovery and make money? You need to, markets are not meant to indulge you in these kind of things. You need to test your patience. You need to buy and still see stocks 15% lower, and to check out whether you have the tolerance levels to withstand that and then make money thereafter. So I think time-wise and price-wise are what I would consider, these days in the technology world, these become more instantly gratifying than otherwise. Yeah. And the pain level is also reasonably instant. So Facebook, which is a well talked about FANG stock, corrects $150 billion in market cap in aftermarket, and sets the base for a new round of valuations of the entire space. That's instantaneous. So if somebody told you invest in Facebook, and you would actually see that the greatest participation in the FANG stocks probably happened in the last 25 or 30% rise, and that's exactly the elimination that's happened of all those players in a short period of time. So stocks that perform, a few days ago, Google came out with results, Alphabet, and that's actually made new highs after the result. This is corrected 25%. So the risk and reward in a sense almost gets meted out instantly. That's the beauty of technology and global movement of money, if you will. So from that perspective, it's quite likely that given the extreme apathy towards mid-cap stocks, that the gains could be front-ended as well. It's not that the markets are ordained to give you that. That's the limited
point. Great point.
Yeah. So, one case is, Jakes, about the mid-cap sell-off, where you see and find value right now. The other one is Nifty. I know while we're just waiting and counting down to 7 points and we should make it to that all-time top, it's been a very narrow rally. The leadership has been with some of those 5-6 names, or at best maybe 10-15. How soon before the Nifty as well spreads its wings and you see the other 30 underperformers also join into the bandwagon?
See, the way I see this is that the Nifty has been the beneficiary of this flight to safety kind of trade. Yeah. today some of the leaders in the 8-10 stocks that have led the Nifty, or 6 stocks, depending on the way you look at it, have almost been because money just got allocated to that space or to those companies which have accommodated the money away from other stocks that we talked about.
Yeah.
The important aspect here is that it's money allocation. Now, just money allocation doesn't mean that there's value allocation. So today, you have to look pretty deep into the Nifty to figure out where the next, sort of next set of leaders or sucker will come from. And I think one space that could keep the Nifty going, even though the weightage is small, actually is PSU banks, led by State Bank of India, etc. Because I think the Canara Bank tells you a story. This is the first quarter when you're seeing resolutions having happened, which means assets that were carried at zero, advances that were carried at zero interest rate and not accruing, now suddenly being, coming back onto the books as at 80% or 70% of the value.
Bad assets have become good assets.
But have become good assets at say 80%, 70%. In fact, the recoveries have been much more than what people have got. But I think the important thing is those assets with no further lending have suddenly become earning assets, where zero becomes 8 or 9% or whatever that they are now earning at under new management. So I think that is a powerful reallocation of money, if you will. The second thing is this space was very heavy and it was excess SLR to the extent of 28 or 29%, almost 8-9% excess SLR. The average SLR in the system was about 29%. Today there's been a shedding of a lot of that portfolio and reallocation to new advances, if you will. And 3, the fact that yields have gone to levels that they have, my own assessment is that a lot of foreign money at these kind of dollar rupee rates will come in a sense, move debt holdings from domestic to foreigners.
Okay, I'll give you a ring which you love, this ring. Close your eyes and I'll say it. Nifty at an all-time high.
Fantastic.
In this kind of a market,
He's
when
our
mid
lucky
cap